The Australian dollar remains weaker as the US dollar gains ahead of the Fed Beige book. The US Central Bank will publish its first 2023 report this Wednesday, with markets currently pricing in a 93% chance of a 25 basis point rate hike in March. Good day, and welcome to your daily Australian economic news update, where we give you all the day's news in under 1 minute. The Australian dollar is currently buying 68.70 US cents, which is down almost 0.5% on yesterday, and it's also lower against the euro and the pound sterling. It's been a very weak start to the year for our currency, and we're now at the lowest level in almost 2 months. The question is, what's driving the price lower? Well, firstly, it's that time of the month again when all eyes are on the U.S. Federal Reserve and their policy decisions around interest rates. Now the market's pricing in a 93% chance of a 25 basis point rate hike in March, which would be the 25th increase since the Fed started hiking rates in the beginning of 2022. And the market's also pricing in a 7% chance of a 50 basis point increase, which was driven by stronger than expected U.S. jobs data last Friday. If the Fed does go for a larger 50 basis point increase in March, then this will put further upward pressure on the US dollar and downward pressure on the Australian dollar. But before the Fed makes any decisions, they will publish their first Beige book of 2023 this Wednesday. This is a report that gives an overview of the US economy, and it will give us some clues as to what the Fed may do in March. The report will include data up until January, which means it will include the December jobs report and the December CPI report. Both reports showed further cooling in the U.S. economy, which supports the case for less aggressive rate hikes. However, the January jobs report is due out this Friday, and if it shows a strong recovery in the labor market, then this could push the Fed towards another 50 basis point increase. The Australian dollar is also lower against the Japanese yen today, buying just above 64 cents. The Bank of Japan kept monetary policy unchanged yesterday, sticking with its minus 0.1% yield target, and the central bank's governor said that there's no change to the plan to keep monetary policy in a very accommodative stance. Now, looking at the economic calendar, there's not much going on today. We have the release of the Chinese inflation data and the Japanese industrial production data, but both reports are expected to show further slowdowns in these economies. The only other data we have today is the U.S. ISM manufacturing report, which is expected to show a slight improvement in the U.S. manufacturing sector. But if it does improve, then this will increase the chances of a 50 basis point rate hike in March, which will put downward pressure on the Australian dollar. That's all for today. Thanks for watching and see you tomorrow.